Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska's soybean farmers and their checkoff. I'm Susan Littlefield. Another interesting trading week has happened. It was a shortened week because we had a holiday on Monday. But this coming Monday is going to bring some excitement with the USDA report. And for those in Nebraska, it might mean rain on Saturday. We'll talk more about that, the weather, and a lot more in today's report.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
And welcome back once again. As you can see, joining me on the screen is Jeff Peterson. Jeff is with Heartland Farm Partners, and we've got Sam Hudson with Cornbelt Marketing. And gentlemen, as we take a look at what's happening, it's been an interesting trading week. We saw a lot of green on the screen for a Friday. But are we positioning ourselves like getting ready for Monday's report? I'm going to start out, Jeff, asking you that. What are your thoughts on Monday's numbers?
Yeah, I think there was a lot of positioning, coming into the report. And as we start digging into that, all eyes are basically on the yield. And the thing we have to remind ourselves about on the yield side is that, this isn't a minor tweaking of what the August yield was. I mean, this is a new set of numbers. And so now we have to look at is USDA, and in particular is NASS, are they going to end up finding something that supports, where basically the farmer surveys and the NDVI data was, or are they going to come in somewhere closer to what we ended up seeing from the results from the pro farmer numbers? And our belief is, you take a look at some of the average industry guesses, sitting there a little over 172, depending on which service, whether you're looking at Reuters or if you're looking at the Dow Jones. But as they get out in the field and dig into these numbers and dig into these yields and actually look at the plots, look at the ears, our belief is that we're going to see the yield pull back. I think ultimately we could end up seeing maybe a number a little bit higher than what the average guess is, a little higher than the 172, even though down the road I believe the yield will be lower. But that's what it's kind of looking like right now, Susan.
Sam, what are your thoughts ahead of Monday's numbers?
Well, I would piggyback on what Jeff said in terms of the expectations versus what we could get. I think a lot of this started with Pro Farmer kind of letting the cat out of the bag there in the third week of August, and really churning up these ideas that yield could be dramatically lower. And keep in mind, they're going to try to estimate a final number, and USDA's got several months to get this right, and they don't really want to reverse on themselves. So I do see them coming down with yield. I think it's very possible we could see something around 173 or 174, and then just make some nominal declines as we get into harvest here, and maybe wait on some combine data. But Jeff also made a good point that the methodology is going to change a little bit here, so it'll be interesting to see if there is any deviation between expectations versus what they're actually finding. I tend to think the October data set may actually end up being more important, and that could be more so for beans even more than corn.
So do we expect a knee-jerk reaction Monday after the numbers come out?
Well, the question is how much we got worked into this thing, and I really believe you've dialed it up pretty good here, and it's happened in an environment where we've continued to see very low open interest and low volume traded. Today is another example of that in the wheat market to close the week, up 30 to 40 cents, very low volume, and I think as we get into harvest here for corn, as we see a little bit more depth, a little bit more hedge pressure, it's just a lot easier to sell corn $6.50 to $7 cash off the combine if you don't have space for it. I think that could slow things up a little bit, but basis markets are going to remain hot. You're going to have $7.50 to $8 corn in the West and $6.50 corn in the Central Corn Belt.
Well, it's funny you should bring that up. And Jeff, we've heard a lot of guys making the comment, just what Sam said about going in the bin. Many folks are wondering, is it better to go in the bin or go to the elevator?
Well, that's an interesting point, one we get asked a lot. So just kind of digging into that this nearby demand, if you have some corn and you're coming off your combine and you can hit some of these early basis numbers, and whether or not you've got it sold or you don't have it sold, ultimately going after that early basis here is good. Now, we think gut slot basis, as you look at where it's at right now, we think that'll improve as we go down the road. And we think post-harvest basis will end up getting much better as we go down the road. The interesting thing about how this market's traded beyond that, though, Susan, it's interesting that we've actually seen corn maintain the strength that it has and keep marching up while we've seen that big pullback on the crude oil. Now, we've seen a little bit of recovery in crude, and that's been encouraging. But the thing we have to take a look at down the road, and the thing we have to think about is physically, once we get past the yield numbers, and start thinking about what that means for demand down the road. We got to be careful that we don't end up just thinking basically the ethanol demand is going to be a layup. Now, personally, we think energy prices are going to increase as we go down the road. So we aren't as concerned about will we see a pullback on some demand from those ethanol plants as we go forward, as we get past harvest. But that's something we're going to have to watch very close. And then in addition to that, we got to keep a very close eye on that South America and what's going on down there, Susan.
Yeah, and it's definitely been interesting. I think the pressure's on for South Americans to plant more crops this year, knowing the struggles we've had here in the States.
Yeah, they really are. And for something this time of year, just to kind of get a quick update on where they're at. So, it's interesting. A lot of different things going on right now in Brazil. We know the overall climate that they're in. We're going into our third year of La Nina. And we know in that third year of La Nina, we should see a little bit drier conditions, potential in that southern parts of Brazil and also in that northern parts of Argentina. And then from there, though, we have to think, they're about 98% harvested, just on the final stages of finishing up with that safrinha crop. But they're already getting that, first crop corn crop planted. They're probably about 8.5, 9.5, 10%, depending on who service you look at. But then on top of that, we'll see them getting started on soybeans here soon. And I think that's been what's been putting a little bit of pressure on our bean market here. You hear a lot of people talking about 145, 150, 155 million metric tons of soybean production coming out of South America. But the thing we have to remember is that last time, this time of year, there was also a lot of talk about some big numbers. So depending on how long we ended up seeing the La Nina hang on is going to depend on what they're going to produce for crop, Susan.
All right, well, Sam, we know what it looks like in our backyard. I know June 17th around us was the last substantial rain we got. Crops don't look so good. Now, I'm hearing the Eastern Corn Belt's kind of got a prettier picture, shall we say. So what are you hearing from your neck of the woods?
Yeah, I would say, we had a very good planting, potential there in late April for some guys in the area to get in early. And I think that's probably going to offer the most promising yields. I think the two complaints we would have is the heat that we had in June when Nebraska was getting all the severe weather. We didn't get any rain with that, but we got severe heat. And some of the later planted corn, I do think saw some stress in that. And we've also gone very dry over the last 30 to 45 days in this area. So I think that could end up having a bigger impact on the Group 3 soybeans. I think the Group 2s are going to be far enough along. It won't have a big impact there. But as you get into these drought areas further west, I think that's, it's the good versus the bad. And I think, it's kind of the theme for, even the demand side of things as we move forward. It almost feels like you can't have enough of this stuff for the first 4 or 5 months of our marketing year here. But as we get past March 1st, who knows what's going to happen with the high dollar and as you mentioned, the expansion in South America.
All right, you brought it up. Let's talk about this reversal we've seen of the dollar and how that's weighed in on the trade. First, Sam, what are your thoughts?
I'm kind of one of those that doesn't believe it's a huge impact right now, because I do think at the onset of harvest, exporters got to get what they need, and they're going to be battling the feed guys and the domestic processors to get that done. But at the end of the day, if they need it, they're going to have to come to the table and pay for it. Now, as we get on into the February and March timeframe, as we have a better handle on what South America's potential could be, that's where you get world buyers sitting on their hands, staying hand to mouth until that next crop cycle it comes about, and that's where we really see the biggest risk moving forward for both corn and soybean exports on the back end of this thing. And I would reiterate, Jeff mentioned the good basis levels on the front end here. I think that's something to really take advantage of between now and probably January 1st. Lock up those bids, get it merchandised. Doesn't even mean you have to sell it, but you don't want to get caught holding the bag if everything does turn out as planned.
Jeff, do you have any concerns with the way this dollar's been and affecting our export opportunities?
Yeah, it's always a concern, but I'm kind of like Sam right now in regard to the dollar. Is the first thing we always want to dig into and touch on is that we're always talking about the U.S. dollar index, which the big thing about that is that's very heavily weighted to the euro. It's a basket of about 7 currencies is what the index is. So we always want to dig in and look at, how are we faring out against the real, or we know that basically China is pretty well pegged to us, or the Japanese yen. So we take a look at where those are at. But yeah, it definitely can give us a headwind. As we go forward, I think we have to be very concerned, though, and I'm so glad that Sam brought this up, is as we talk about the demand side, well, we believe we could be seeing some pretty good exports out of the U.S., but we know that South America had a big crop on the corn side. If they would happen to have a big crop on the soybean side too, we've got a headwind there. But we can't forget about, the challenges that China is having economy wise. And the other thing that could actually amplify that a little bit with the problems that we're seeing coming out of Europe. So think about this. We're bringing up big energy increase price wise in Europe. If that would go ahead and put Europe into a recession because of what they're paying on the energy side, keep in mind between the US and Europe, basically as it relates to China, those two countries, the Europe and the US, we buy 60% of basically what China produces. So all of a sudden, you could take a situation here where maybe the global economics could slow up some of that demand some, and we don't necessarily have what's been a very good strength there for us any longer, Susan.
And finally, Sam, as we wrap up everything, the feud with Russia and Ukraine. It seems like these guys cannot get along in any way, sense, or form. With this grain shipments, do you think this is going to have a longer term effect on our markets?
It certainly is. I mean, and I don't know that it's anything different this week than it was, last week. I realize the market's moved up here again. I mentioned it was on very low volume. Most of the gains this week were, off of comments that Vladimir Putin was going to, quote unquote, review the Black Sea grain corridor, stating that a lot of the inventories that had been moved out so far had gone to the EU as opposed to some of the impoverished countries in Africa. And then, they're talking about pledging some free fertilizer and some other things to some of these other countries after that. Well, they're advertised to have basically a record crop. And so if they're not already providing that to the world, basically the theme is you can't really trust anything that what they say. You can't lean on anything. We're going to see reduced movement out of there and reduced supplies in general moving forward. And the rest of the world has to fill that hole.
All right. Well, we've got a football game here that's celebrating agriculture in Nebraska. We hope that this football game brings some serious rain. Gentlemen, thank you so much for joining us this week.
You bet. It's always a pleasure, Susan.
Thanks, Susan.
All right. Reminder, folks, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's from the Nebraska Soybean Board Weekly Market Roundup.